33 minutes ago, Home Depot stock gains on 15 billion buyback. Decker, new chairman. Not sure if you guys heard, but they're actually going to start taxing stock buybacks at 1%. Unbelievable news. Stock buyback is a more efficient way to get money into the hands of your investors or your shareholders through equity growth. Because if you pay out a dividend, it's double taxed, right? It's paid out as a corporate tax to the corporation, and then it gets paid out and it's taxed again as a dividend when it lands in your account. So companies over the past really been very strong over the past 5 years have taken to the liking of buybacks because it boosts their shares, it boosts the balance sheet, makes the CEO look fantastic. Everybody gets a little bit richer, and in the end, they can outsource the debt. I mean, because it's all debt that they use to do the buybacks, right? And they can debt has been very cheap. So now that debt is getting more expensive, it's going to be a lot harder for companies to do big stock buybacks. It's going to have a big effect on overall asset prices, and it's going to be a big part of the equity pullback. Because when you take a look, let me show you guys here. How many billions in stock buybacks have we had over the past 10 years? Check this out. Oh, no, not the tunage. Oh, hold up. Get that tunage right back on. You guys want something else other than the funk? Just let me know. All right, so just at the end of last year, we've got an article from CNBC breaking down some numbers. Buybacks are poised for a record year, but who do they help? So this is what we were talking about. So at nearly 850 billion total buyback volume for 2021 would exceed the record 806 seen in 2018. These are unbelievable numbers here. Let me run some math really quick. All right, so just do it. So the Federal Reserve was stimulating to the economy to 120 million per month in quantitative easing. All right, so that real quick, that is 12 million plus the 24, right? So that's 136 million, or wait. 122 times 10, that's trillion. $1.36 trillion in 1 year. All right. Stock buybacks, 850 billion. All right. Leaving us of a difference of 150 plus the 3, like 400 billion in difference, más o menos, in what stock buybacks were for a year, as opposed to all quantitative easing from the Federal Reserve in that same year. That's mind-blowing, right? Like, if you think about that number in perspective, it's insane, right? So if you don't think that the Federal Reserve stimulus is what buoyed our markets for the past 2 years, followed by stock buybacks because interest rates were super low, and then you also don't understand the repercussions of fractional reserve lending, and that once this money's created, then 900% of it can be created just off fractional reserve lending from there. It's one of the reasons why economic factors take a while to play out, because once stimulus comes in, it still has a chance to stimulate as a ripple of stimulus throughout the market that the Fed doesn't even have to touch. It's just a mechanism of our U.S. monetary policy. Right? So if you don't think all that money is inflation or hyperinflation, and if you don't think that boosted up our equity prices beyond any reasonable bubble that they should be based on fundamental analysis, then you're eating the meat Kevin sauce, and you're kind of like, kind of stuck on that mainstream narrative. This is an unbelievable amount of money. This is, let's say it was $3 trillion was all the money in the world 2.5 years ago. Now it's 6 trillion. All right. If it was 100 trillion, Now it's 200 trillion. We've doubled the amount of money in the past 2.5 years that existed on the planet. That's every single currency across the board. So, yeah, we're in trouble. I still like getting funky. I'm going to keep it funky unless we get some other requests. Keep those vocals off. I'll do the singing here. Thank you very much. All right, back on track there. Okay, so again, we covered a lot with the stock buybacks. Probably one was that buybacks are surging after cratering in the first half of 2020 because that thing happened. Q1 of 2020 was 199 billion. Q2, 89, cut in half. Q3, 102, then we start boosting up. Then 131 Q4 of 2020. Q1 2021, 178 billion, almost back to pre-pandemic levels. Q2 tied pandemic levels, 199 billion. Q3 2021, 234 billion. Q4 estimated 238 billion. That beat the record in 2018 of 806 billion. So, biggest buyback monsters are Apple, Facebook, Google, Bank of America, Oracle. Okay, this is interesting here. Check this out. The result often is a wash. The total share count for the S&P 500 is slightly higher today than it was in 2018. There's an additional reason buybacks are not generating share count reductions despite record amounts of money spent. Buybacks are executed in dollars, not shares bought back, but the S&P 500 is up almost 50% since the end of 2019. Well, that has corrected now, hasn't it? But we are probably at levels similar to where we were. Let's check that out real quick, actually. Let's bounce over to the charts. What were our levels on the S&P in November? That is the question I have. All you all beautiful people. Who can answer first? Who's got it? Okay, so our levels in November on the SPY was the 449, 450 range, and we closed out the month in the 448 range, and during that month, we surged as high as 467, and that was just 1 month before we hit our all-time high of 476, roughly on the SPY. And that day was, oh, do you remember that famous day? January 4th, 2022. Huge pullbacks ever since. And huge run-ups, too. Look at this. All right.
Trying to make y'all comfortable. For the record, you ain't trying to grow, then it's done for you. For the record, lab on me going all the way. For the record, ain't trying to link, no time to waste.